Hello, this is Jordan. This video is being recorded on the late evening of Sunday, January 15th, 2023. Thanks so much for joining me today. In this video, I am going to take a look at the week ahead for gold and silver, as well as the miners. And if you haven't already subscribed to the channel, I would really appreciate it if you did. Click on that subscribe button, smash it, as they say, or tap it gently. One other thing, I don't run any ads, so you can skip around on these videos. You don't have to worry about an important part of the video coming on and then suddenly just the video stops and this ad comes on. I mean, don't you really hate that? But anyway, I'm getting away from the video. Let me get to it. Okay, so starting off, we got gold and silver, gold at the top, silver at the bottom. These are daily candle charts. You can see the thumbnails there on the right, the action of the last month, and the blue lines. You can see the 200-day moving average. The other blue lines are support levels, and red are resistance levels. And at the bottom, we have the gold-silver ratio. You can see there on the bottom right that the gold-silver ratio has rallied from 75 to 80 in favor of gold over the last month. And, in that time, gold has moved up. I mean, if you can just look at the thumbnail, gold's gained more than... if we look at where the thumbnail started, you can see gold in the high 1700s. Then several days after that, it's in the low 1800s. So since that point, silver basically has gained nothing, and gold has gained $100 an ounce. So silver, of course, led this rebound dating back to last year, months ago. But now silver has really done nothing for the last month. If we're looking at the silver action there in the silver chart, it looks like a bullish consolidation by itself. But this is why you have to evaluate many things in technical analysis. So the fact is, gold has surged $100 an ounce since then, and silver has consolidated. So we'll see, because, my thought would be, and I've probably said this in the last couple weeks, given the strength of gold, if gold moves higher, that can pull silver up. Maybe silver will be able to get to 25, 26. And so I guess we could think that's still a possibility. But, I don't know at this point, because gold is really starting to run into stiff resistance. I mean, this is just a daily chart. But the next level, I apologize, I didn't note it on here, but it's really 1950, 1960. And if you're looking at a weekly chart, I think it's 1960 or so, or 1950. But on a monthly chart, 1950. And I pointed this out in a premium update a couple weeks ago. When you get gold making a weekly close above 1990 or a monthly close above 1950, that would be the second highest close in those terms. So in other words, if gold closes the month above 1950, that's the second highest monthly close ever. So we're getting to the point where, and I mentioned this, and I've said this, gold is going to have to chew through, 1870 to 1950. Well, it's already at 1920. So, I thought gold would have, this rally, I mean, personally, I thought we probably would have corrected at 1830, 1840. Then 1870, and then 1900. Now we're at 1920. So I keep raising the targets. I mean, that's kind of what you see in a bull market, right? I mean, the expectations are to the upside. But with all that being said, really stiff resistance at 1950. You can see that on the monthly chart. You can see that on the weekly chart. So I think that's a level that, if gold were to hit 1950 this week, I think you're going to see immediate resistance. Like, you're going to start to see some selling in there. Not saying it's going to fall all the way back down, but that's, this rally is getting long in the tooth, and 1950 is an area where I think it probably stops at this point, if I had to hazard a guess. And, who knows with silver? I mean, maybe if gold can hang around 1950, that'll pull up silver to 26. Maybe because we know that silver tends to be more correlated to the stock market, if gold starts to slow down, but we see commodities gain more strength, people become a little bit more optimistic that there's not going to be recession, but there's still going to be inflation, stagflation, then maybe as gold corrects, maybe silver could push up to 26. I'm not making predictions. I'm just throwing out scenarios. So it'll be very interesting to see what happens, given that silver's pattern, its price action looks really bullish, but the fact that that happened while gold has rallied $100 is definitely not bullish. So, the key support level for silver, I mean, we could see there on the chart. I mean, initial support you have there in the low 23s, low to mid 23s. And so, if we were to get some kind of a sustained correction, pullback, or pause, look at the 200-day moving averages. They're both starting to flatten out, and gold and silver have moved quite a bit beyond those moving averages. That's what I like to see. Gold all the way up to 1920 now. Look at where the 200-day is, 1787. It's starting to flatten out. Before this move really started to accelerate in gold, I mean, you can see around 1835 area, that's going to be a support level. I think that would be tested if we start to correct, and then we can also consider coming down to 1800 or so, where, the 200-day moving average is probably going to make its way up to 1800 in the next couple of months. So those are some potential downside targets over the coming months if gold does correct. And same for silver. I mean, silver, you can see 200-day moving average is at 21, starting to flatten out. There's good lateral support there in the mid-20s. So, if we're going to see that kind of correction, that's where silver could go to. But, at this point, even though I think that gold is probably this rebound is probably going to fizzle out around 1950, we may not get that big of a correction, because this happens early in bull markets. You get a move, and then there's a lot of people who are sitting there waiting, like, I'm just going to wait for a correction. I'm waiting for some more weakness to buy this, and then it just never happens. Turning to the stocks, like I admitted it in a premium update, 8 days ago. I said, look, we've put cash to work, but there's still 3 positions that I wish I would have just bought 2 or 3 weeks ago, but I was, waiting for like the perfect entry point in a pullback when I should have just bought them at that point. I was just looking to add to these positions of strong, juniors, really strong companies fundamentally. But anyway, I'm just babbling on and on here. The video's getting long, and I'm not even on to the second chart here. And so here's the miners. And so it'll be interesting to see what the miners do, because GDX has already come up to resistance there at, just below 33. I think I mentioned a week or two back, 33, 34 is a level. GDXJ closed at 40.40. 42 is that measured upside target. SILJ, we're looking for the upside target there in the 12s, maybe upper 12s. So SILJ is closed at 11.71. So, maybe if we see some more buying this week into a potential top for gold, if we get more buying and gold pops to 1950, 1960, maybe that pulls up the miners here a little bit more to those targets, GDXJ and SILJ especially. So it's been a really good move, and, we'll have to assess. There's a lot of other things we'll assess. We'll have more videos coming, but that's my outlook for the week. I definitely would be on guard for a potential peak, not a major peak, but, just a point where the market could pause and start to correct a little bit in price. 1950 is really stiff resistance. I'd be surprised if gold went through there without pausing for, at least a couple weeks, probably more than that at first. But that's enough for me. Let me know what you guys think in the comments, and talk to you again in the next video. Thanks for tuning in.